Welcome back, where we head straight to the commodity segment with the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani. And Mr. Rwani, FDC is projecting, we're expecting inflation in a couple of days, supposed to be like on the 15th. So we're expecting inflation to hit, or FDC is expecting inflation to hit 31.04% in February from 29.9%. That's not much of a movement, is it?
It is much of a movement. Good morning, Inian. Thanks for having me. The reality is that the figure projected, and it's coming out tomorrow, is for it to get to 31.02. But more importantly is the fact that we are going to see food inflation above 37%, actually about 38%. We are going to see core inflation actually increase as well. So basically, we are in a high inflationary environment. But what is interesting, in the last 2 days, we've seen some prices of some commodities actually begin to decline. In particular, we saw pepper decline by 11%, about 75,000. We've seen Bonvita decline. We've seen tomatoes decline sharply to 30,000, almost 15%. And we've seen Indomie noodles actually decline. Why is this happening? Two things. One, because fundamentally, the fasting started on Monday, and today is Thursday. So typically, during the fasting period, we should see an increase in demand because people buy in bulk, but we've seen the reverse. Why? Because the price of these commodities have got to the resistance point where people are now beginning to say, we can't buy it at this price. For example, rice at 95,000, people can't go further. They cannot buy rice at anything above 95,000. So we are beginning to see price resistance, consumer resistance, and then substitution effect. People are now actually eating less in terms of quantity, and even eating less in terms of quality as well. So quality down, quantity down, and prices actually have to come down this time.
So, I mean, just as you've noted, with the Ramadan is here, and we know that some specific commodities get more pressure because they serve as, commodities that are used for breaking and all of that. And so we expect this trend to continue. That's a hike in the price of especially this commodity. We expect it to continue at least until the end of Ramadan.
Yes, we expect that to happen. But what is important, though, to note is that the inflation numbers we are talking about are those of February. We are not talking about March. The real effect you will see is when the March inflation comes out. So February, what happened? February 26 and 27 was when we had the MPC meeting. So the effect of the interest rate increases, the effect of all the tightening of money would not have any impact right now. You will see it in the March numbers. So what we are projecting today is the February inflation. It's in March that you'll see the big spike. So I don't think it's too early to start celebrating that inflation is moderating. But quite frankly, we're going to have the surge. And it is in March that we saw the effect somewhat of the exchange rate depreciation. You know, it appreciated all the way to about 1,400 and then depreciated back to where it is now. It's at 1607. So that exchange rate volatility, the price increases and the logistics cost will feed into March. And March is the month where you have Ramadan. March is the month where you have Easter. So you will see products like some products that are used for Easter celebration, Good Friday, Easter. You begin to see those prices manifest themselves at the end of this month. So for inflation monitoring and projection, I would prefer to discount February and March, and then begin to look at April, where we think that inflation begins to moderate because the planting season will be in full swing. And then we begin to see, and the exchange rate is beginning to appreciate. We begin to see lower, actually falling prices, not falling sharply, but at least moderating.
And that should be to us. I know, Mr. Rwani, you did say this, I think last year, that is it the last quarter of this year we could see a little bit of moderation. We also did hear that from some other economists and international bodies. So do we expect this moderation to begin maybe second half or last quarter so we can hope for something?
No, definitely. Let me say, the exchange rate had gone all the way to 1915. At 1607, is it great? No, it could get better, but certain things have to happen. You have to understand, for example, that the federal government has engaged the services of JP Morgan, Citibank, and Goldman, JP Morgan, Citibank, and Goldman, to issue some Eurobonds. If the Eurobond issue, once the conversation starts, people begin to invest money, they know that dollar supply will increase, and when dollar supply increases, the exchange rate moderates, not fundamentally, but at least directionally. And that means that everything that is exchange rate dependent begins to appreciate. So our view is that no quick fix. A lot of work has to be done, but it's going to take some time. And let us not fall into the crisis of false expectation. This thing is not a quick fix. There's no silver bullet. Many things are happening at the same time. The Dangote refinery and some international prices begin to decline. But it will take time before you begin to feel it. So for the next quarter, just fasten your seatbelt because there's going to be a turbulent ride ahead.
Wow, I was hoping for a little bit of hopeful news, but thank you so much for giving us the reality as FDC sees it. Mr. Bismarck Ruwani, Chief Executive Officer of FDC.
Thank you for having me.
Let's take another break. When we come back, we'll head to another segment where you may have an opportunity to invest. Depends on you. After the break.